I must say, every time we meet, there's a bit of a sell-off in the markets.
Yeah, and I think, last time around I said, I was hoping for, another couple of days of a sell-off, and gives you more buying opportunity in the market, and it seems like we're back in negative territory this week after the markets actually ended in negative territory last week, but we had some up days as well, in order to, to kind of bounce the market. Interesting to see the Dow now again below 11,000, not quite, from a multiple perspective. We're talking from a price to earnings perspective, just running way ahead of where earnings was, and it's now, it's kind of tending to kind of stay where it is, or there's volatility at that point. Where either earnings are going to start picking up and suspending the market at this level, or alternatively it's going to have to start meeting its earnings, at a lower level and a lower multiple maybe,
Investors continuing to shrug off that economic data out of the US. It is quite important economic data, but Eurozone is at this stage, at center stage.
Yeah, but the interesting thing is when you go back 12 months or 16 months, the dollar was center stage. Everybody was talking about the integrity of the dollar. Will the dollar now default? Will treasury bonds default? Should the dollar be the reserve currency of the globe? Maybe it should be something else. And people started looking at the euro as a potential as a potential alternative for that. And all of a sudden you see a reversal of that now. It's exactly the same type of woes, or it's not exactly the same, but the woes that you saw in America has merely now shifted to the Eurozone. It's kind of just laid bare kind of the issues that the Eurozone has to deal with,
How serious will the situation be if Greece defaults?
Well, I think, if Greece defaults, from an economical perspective, the economy is actually quite small. It's not a massive economy. If Germany defaulted, that would be a much, much larger problem for the Eurozone because of its size, obviously, in the complete basket. So the Greek default is merely, as a country, it's tiny. But the problem is that you've got it attached to the euro, and the euro is a common currency unit. So if you've got a default in Greece, you've got a default as far as euro is concerned. And because you have a default as far as the euro is concerned, that just creates instability in the whole region. And for that reason, obviously you don't want to see a default. And that's part of the way why the Eurozone is looking at all these loans, and they're looking at potentially floating the economy again.
There's so much uncertainty on the market. As an investor, would you be going to bed at night? What should you be doing?
Well, Greek bonds at the moment are yielding these astronomical yields at the moment. I looked at a 2-year note the other day, and you could make yourself 18%. The yield on that is 18% at the moment. Now, the question is, what is the probability of a default here? Yes, they've got some serious structural issues that they have to work through. I think I feel very sorry for people that live in Greece, predominantly because the economy is not all of a sudden going to start turning from a GDP perspective in a huge way, which will be able to help them collect much more taxes, where they can start leveling off debt. They're sitting really in a mature economy. So from a citizen perspective, I think they're in for a lot of pain for a long period of time. But said with that, and that's probably why you see all these protests and so on, but said with that, from an investor's perspective, there's so much panic in that market at the moment that surely there must be buying opportunities. There must be something you could potentially be buying.